trading boom continues to grow, and we've got some surprising new data on how and why folks at home are diving into this market. Kate Rooney has the details. Hey, Kate.
Hey, Melissa, some new research suggests that it was more about bargains than people having extra time on their hands. SoFi and Sentiment out with a study today about trading behavior in June. All generational cohorts, from Gen Zs to baby boomers, saw depressed stock prices as a buying opportunity. That was the top response as to why stock trading increased. Next was extra money in people's pockets, followed by more awareness on the importance of investing. And fourth on the list at 34% was to replace activities that COVID restrictions have eliminated. Stimulus checks also playing a role by putting more money in people's pockets. More than 80% of those polled received government stimulus. Half of them used, quote, at least a portion of that money to buy into the stock market. Researchers also say they saw respondents who gamble or bet on sports getting into the market at a higher rate than their peers. And finally, there was an uptick with people trading on mobile devices. Melissa.
All right. Thank you, Kate. Kate Rooney. And speaking of the folks at home, it's time once again to answer your burning market questions. Total Request Fast Money was such a hit, Guy. Lots of fun, right? We got so many questions. We thought we'd take some more.
Tremendous.
And our first question comes from John in Long Island.
Hi, guys. This is John from Long Island. My question is on Salesforce. I bought her in the March lows, and it seems to have hit a resistance point at $200 a share. Do you think I should sell right now, as it may not accelerate from here, or hold or potentially buy more? Love to get your thoughts. Thank you.
All right. John from Long Island. Jeff Mills, what do you say to him about CRM?
Well, look, if you bought at the lows, you're probably working on a 35, 40% gain, something like that. So I think at that point in time, it's always smart to take a little bit off the table. So I would start there, John. But I'd also say the stock is holding a multi-year uptrend. It looks like it wants to break out to a new absolute high. It looks like it wants to break out to a new relative high versus the S&P. So I actually think that you can play the momentum in Salesforce, but definitely take a little bit off the table if your gains are that big.
Bonawyn?
I tend to agree. I mean, it's really not just about my view on the stock. It's about what is the prudent way to go on ahead and risk manage. Up 35, 40%, you 100% need to be taking some chips off of the table. I would agree as well in terms of the long-term uptrend. I would say it is pressing down a little bit towards, if I remember correctly, its 50-day moving average. But as long as it holds those long-term averages, I would stay in with at least a portion of my investment. Absolutely.
All right. Our next question is an international one. It comes from Roberto, all the way from South Africa.
Hi guys, I'm loving the show all the way from South Africa. I wanted to ask a question relating to gold. It has run to within $150 of its historical high. So my question is it time to start shorting gold and gold stocks? I mean, even if it was to run to 2,000, there should be more downside than up, right? I just wanted to say thank you for having me on the show, and thank you for your amazing analytics. Cheers.
Roberto from South Africa. Guy Adami, who knew we had fans all the way in South Africa?
That is unbelievable. You know, when back in another life, one of our largest clients was the Reserve Bank of South Africa. And the road, I believe, from Pretoria to Johannesburg is Route 101, and that was the code name. Anecdotal story. I know nobody cares. Shorting gold here, to me, is a very short-term trade. I do not, although you had a huge reversal in Newmont, huge reversal in Pan American Silver today, I don't think that's the right way to play it. I'm still of the belief that gold's going to continue to move higher, as is silver, and as are the mining stocks. So you can be selective if you want to try to short them. But Roberto, I stay long the commodities, specifically gold and silver, for the next 6 to 9 months for sure.
Jeff, what would you tell our South African friend?
Yeah, I think that's probably too, and I'll comment on silver specifically as well. You know, that's put in a massive base, and it looks to be breaking out to the upside. So I agree with Guy. Look, in this environment, you might be able to play it on the short side for a quick trade, but overall, I just think the momentum's too strong. You have had flows that are really aggressive into gold and the gold miners. So for that reason, I think you can play it on the short side near term, but the momentum's strong. So I think looking out any further than maybe a month or so, you probably want to stay on the long side of it.